We've got a new episode of Legends and Leaders, and today it's great to have David here. David, you are part of Core Innovation Capital, which, of course, is in the name. It's all about innovation, but you're focusing specifically on the financial health, economic mobility, these kind of segments, which are really important. And there's a lot of Americans and just a lot of people in general that can benefit from the work you guys have been doing. You've been backing companies in this area. You've been involved in leading deals and finding some of these incredible companies and helping bring them to the forefront. So I'm excited to have you and to get into your story.
Awesome. Thanks for having me. Excited to be here.
Great. So just kind of going back to your origins and your beginning, like what made you passionate about business, venture capital, entrepreneurship, innovation? I mean, it's quite an interesting sector to be in. There's a lot of changes all the time, which makes it exciting. But what made you want to be a part of that, David?
Yeah, it's a super fun, fast-paced job, and I don't like to be bored, so that is ultimately why I ended up here. But going back to the start, I actually grew up in Silicon Valley, so grew up just 30 minutes south of San Francisco, in and around the scene, then studied engineering at Stanford, so very much around tech most of my life. But I actually was always interested in politics and policy and the macro environment. And so I spent a summer at the Treasury Department in college.
Hmm.
And while at the Treasury Department, I was in the markets room for part of the rotation, and I just got hooked on markets. That's the fast-paced kind of solving a puzzle every day, and really like policy and macro environment is at the center of all of it. And so instead of going into tech initially after college, I went and was a fixed income trader. And so went to Morgan Stanley, was in New York for 4 years. Super fun job. You can make a lot of money in that job, which is great. No one's complaining about that. But at the end of the day, you were kind of just sitting there making money, and it wasn't the most fulfilling. And ultimately piecing together what was cheaper, the 4.5 year treasury bond versus the 5 year treasury bond, wasn't really doing it for me. And so wanted to get back to those tech roots. Worked at a couple early stage startups, one in the volunteer management space, and then one fintech startup, which was actually in Nigeria. And so really just got hooked on the power of technology, particularly in and around financial services. And then also worked at did a project at a health tech startup, and that got me hooked on, how do you unlock wealth and health for the mass market? And that's how ultimately I found Core. And so I've been here for 5 years now, and it's been a fun ride.
So, David, you've had a quite interesting journey, and I think one piece that you didn't touch on there was that you decided to go to Nigeria. And you had you were involved in an early stage health venture over there, health focused fintech specifically in Nigeria. And I mean, that was quite an experience. What made you want to travel that far, and what did that do to you? How did that transform you?
Yeah. So really it was wanting to be out of my comfort zone. I'd grown up in the Bay Area, spent a little time in Japan, but for the most part lived in New York and San Francisco. But I've always been interested in other markets and learning new areas. And so it really came down to wanting to throw myself into just a completely different environment. That was number one. Number two was Nigeria and Africa are at the forefront of a lot of financial technology. A lot of interesting things were going on there where they kind of jumped to mobile first. And so they jumped a lot of the old stodgy infrastructure that was built in the US. And I wanted to see what that was like. And so the areas where South Africa, Kenya, and Nigeria are the three kind of largest hubs for fintech in Africa. And helps that they speak English too, because that's my primary language. And so that was all of those. And then I found a business that was coming out of YC, and yeah, it was super fun. Less than 10 people at the time. I remember showing up actually to my first day of work, and the Wi-Fi went in and out all day. The running water got shut down, and you just realize the barriers that these startups face on an everyday basis. There are new interesting challenges when you're going to a tech company in Nigeria versus a tech company in Silicon Valley.
Yeah. mean, the water doesn't work properly. That's a big problem.
Yeah. Yeah, I wouldn't say it was the most comfortable first day on the job, but it did get easier from there.
Mhm. So how did you become a part of Core essentially, and why did you want to become a part of Core? What does Core stand for to you?
Yeah, so then I came back. I was in business school at the time, and I kind of just put all of my interests together. I really liked investing. Had always liked investing, and then I liked being at the early stage. Both those companies I worked at were less than 10 people, and the individual decisions that you make when a company is that small and that early can go a long way into the future outcomes of the business. And so just really liked getting my hands dirty in that way. And then, financial services and healthcare related technology is where I had expertise and where I could punch above my weight. And so ultimately, like put all of those together, and that's how I found Core. And so Core is we've been around for 15 years in business to unlock wealth and health for the mass market and really focus on the big ticket household items. So financial services, first and foremost, that's our bread and butter, where we've been investing for 15 years. And with the idea that technology can bring financial wellness to underserved markets and the mass market. And then realize that if you care about that, it can't just be financial services, but it has to be everywhere where you're making money or spending money. And so housing, the largest asset, healthcare, the largest expenditure, typically, and it affects so much more about your financial well-being. And then small business and work, kind of how do we help people make more money? And a big realization that Core's had in 15 years of existence is that it's not just the people think it's just the bottom 10% that's financially unwell, but it's actually the 90% of American. We're focused in the U.S. It's the 90% of Americans that have some financial insecurity, and it's shocking to hear the amount that are living paycheck to paycheck. And so there's a lot that technology can do, and so that's how ultimately I found Core.
Mhm. So you've been focused on, I mean, what you just talked about in terms of your investment thesis and trying to back these companies. Can you talk a bit about, David, like, some of the recent companies you have backed and you've been involved in and why you have, focused on putting Core's resources towards them?
Yeah, so I'll talk about one that's at the kind of more growth later stage, but I think shows a lot about what Core has been able to invest in and the interesting businesses around that. And so one is called Attain, that really what they do is they offer cheaper earned wage access and loans in exchange for financial data. And then they've built this whole data side of the business with advertisers that helps monetize anonymized first party data and gets real time insights into spending data that other businesses don't have. And so that's creating a lot of enterprise value on that B2B side. But on the consumer side, they're able to offer cheaper loans because they have this whole B2B side of the business. And so they are saving consumers loads of money each year. And so that one's exciting because it's really not just a lending business, it's a data business, and they're creating enterprise value in a lot of different ways. And they've just been growing like a weed. And so super excited about what they're doing there. Another more recent businesses that I've invested in, Autoblocks is one. They're building tooling to help AI get to market in highly regulated industries. This is where, we think at Core, we focus a lot on having the right guardrails in place for new technology and particularly in highly regulated industries and operationally complex, where 90% doesn't quite cut it when you have AI in healthcare, AI in financial services, but you need to get as close to 100% as possible. And so they've built a lot of tooling to build the proper guardrails and help you test and optimize agentic workflows starting out within healthcare. And they actually launched with Hinge Health earlier this year, So got a lot of publicity around that IPO and really excited about what they're doing. And then I'll talk about, one of the intersection of the two, how about health and financial services, but a company called Flex, which is helping you accept HSA payments for eligible and non-eligible goods. And so for the non-eligible, but that should be eligible, they can help write a letter of medical necessity and embed themselves into the payment workflows within brands. And they're working with a ton of large enterprises and winning with the most complex businesses where you have goods that could be HSA eligible, goods that are not yet HSA eligible, and that goods that are never going to be HSA eligible, and they really bring that like compliant layer to HSA payments. And one thing that really excited me about that business is I just think more and more of the world is moving towards this consumer centric proactive versus reactive healthcare spend. And HSA is one of the areas where you can really get into, more consumer centric healthcare spend.
Mhm. So there's also, I think, stuff you're doing around the housing market and housing affordability. It's a big problem. It's something that a lot of people talk about, and I think everyone's still trying to find a solution, to it. What are some of the companies or just some of the interesting things you're seeing in this space, and what are you trying to back around housing?
Yeah, definitely. It's, the largest asset and no one knows what to do with that asset. And so it's kind of we come at it from twofold. One is the reality that not everyone is going to be buying a home. It's become harder and harder to buy a home. The housing unaffordability is literally at its peak, and it doesn't seem like rates are coming down nearly as quickly as expected. And 30-year rates are actually at all-time highs. And so the likelihood that we see low mortgage rates in the short term is limited. And so that means there are going to be a lot more renters, and we want to help with renters in addition to just homeowners. So one of our portfolio companies, PadSplit, is a co-living platform. Really interesting business that a lot of their competitors haven't made it, but they built this tech platform to help landlords manage co-living spaces. Started in Atlanta, but now in a bunch of cities across the country, really trying to be the Airbnb for affordable housing. And done an incredible job so far and have been going very well and profitable. And so we're excited about that business and think that could be the future of affordable housing. And then another company, it that we recently invested in called Abode is building, what we see as eventually the rocket money for your home. So how do you manage this large asset? And they're starting with property tax appeals, energy bills, and insurance rates. And so helping you save money across the board. And then ultimately they'll get into new ways that you can make sure that you're getting the most enterprise value out of your home. And then, a third investment in this space called Arrived Homes, which has built a fractionalized real estate investing platform. What's really interesting there is they actually just launched the first secondary market for fractionalized real estate. And they're seeing a bunch of investors who don't have the money for a down payment on their own. They will be renters, but they want that feeling of that American dream. And so the feeling of owning some piece of a home. And on Arrived, you can invest with as little as $100. So really excited about what they're doing as well. And yeah, we're trying to come up with creative ways to find that American dream, even as the cost of housing has skyrocketed.
Yeah, well, it's good that you're trying, because some people have given up. So it's better to be in that category, and I think you'll make a lot of progress that way for sure. When you think about like just the VC market in general, and like I mean, obviously the goal is to get exits, right? I mean, you want to have IPOs, you want to have maybe acquisitions. What do you think about the IPO market today? Like, is that really happening in the VC world? I feel like we're starting to see some pickup more now, but do you think that that's kind of there's gonna be a lot more traction over there. And like, is that still the end goal for you guys at Core, with some of these companies?
Yeah, I mean, our first goal is to be a top decile fund in terms of financial returns, and so that is for sure still the end goal. Um, it has been a challenging market from an exit perspective, but it does feel like it's changing a bit. So the last few years, really not many IPOs or M&As, but this year especially, we've seen Chime and Circle and Hinge Health. So interestingly, fintech and health tech are leading the charge on the IPO scene. We've also seen in our portfolio and outside of our portfolio, bankers are starting to get very interested in the M&A market. You saw like the high profile acquisition of Wiz for 30 billion. That's not going to be the norm. But there are a bunch of potential M&A in the call it under a billion, 300 to a billion range. And then blockchain also was leading the charge here with Bridge and Privy getting acquired for handsome sums of money, around $1 billion each. Um, and and so it definitely has lightened up since over the last 6 months or so. And I think it will continue. That said, the private market is extremely liquid right now, and so good businesses can raise money and stay private for longer. And they're just advantages of staying private and not having the reporting requirements of being a public company. I know a bunch of CEOs that kind of dread being a public company CEO, and you're in the spotlight a lot more. And so the reality is, a lot of companies will be staying private for longer. And so one thing that we're focused on, and I think will be a big piece of the puzzle, and actually, our first fund is a home run fund with a lot of secondary exits. And I think secondary is going to be a big part of the market moving forward. You're seeing that the liquidity in secondary is increasing for, hot names, SpaceX, Stripe,
Mhm.
OpenAI. There's a ton of demand for those type of companies, but I think there are a lot of good companies that aren't quite as public as those ones that you're going to start to see a lot more liquidity in secondary markets. And so we're preparing for that as well and building a framework internally there.
What do the next 5 to 10 years look like right now, David? Like, I mean, you have your niche of what you're backing, but what do you think will happen in the world from some of these companies that you've backed, and what does core look like in the next 5 to 10 years?
Yeah, it's an interesting question. I wish I had all the answers because then I would be worth a lot of money. I think that over the next decade, um, we, as cliche as it sounds, we're in the largest technological wave that we've ever seen in AI, and I do truly believe that. And I think one of the biggest differences between this and the last wave in Web3 is that everyone is using it. Um, you know, Everyone now has an experience of using ChatGPT or Claude or AI in some fashion, and helping you move faster. And so I think we're going to see AI embedded into a lot of different workflows. And so, agentic tooling is definitely here and coming, and it's going to be very interesting. That said, I do think a lot of the businesses that will thrive are going to be the ones that can build in the intersection of AI and human intelligence. So we're betting that human in the loop is here to stay for the foreseeable future, and that AI is going to augment humans rather than completely replace them, particularly in the industries that we play, these highly regulated, operationally complex industries, financial services, and healthcare and insurance, where you have to be right. And so those are the types of businesses that we are backing. Um, but I'm also excited that, and we're seeing it at our companies, you can move faster with a smaller team. And so while there are these just massive fundraisers that are catching headlines, what I'm excited about is that there will be a bunch of companies that raise minimal amounts of dollars, have small teams, and can just grow to milestones that they couldn't complete before because they're using AI tooling on the back end. This has really like created this 10x founder that was much rarer before.
Well, David, that was all the questions that I had. I appreciate you taking the time and doing this. I think it's exciting that you've found a really good niche that has, clear real world impact, and you've just put as much effort and resources as you can towards that area. And I mean, specifically what you're trying to do in the housing space is very important. And you're backing interesting companies over there, and even just other categories with, fintech in general. People need better tools. So I'm excited to see, what happens next and where Core goes, and what you're up to as you move forward. Thanks for coming on.
Appreciate it. Thanks a lot, Ben.